company called the WH Group. They came up with the name, but it was previously known as Shanghui or the Shineway Group internationally. Chinese company out of the Henan province in central China, mostly focused on pork products because the Chinese use more pork than the rest of the world put together by a factor of about 100. When I say use, I mean consume, eat, finish, down, put it away. Listed in Hong Kong though, so one of the subsidiaries that is the meat processor is listed in Hong Kong with a market cap of 112.5 billion Hong Kong dollars. You've got to divide that by about 6 in order to get to US dollars. Okay, so we know what we're talking about. Similar
about
size,
the same size
as Tyson. What's interesting as well is that this company in 2013 bought Smithfield Foods, which was the largest pig producer in the UK.
And big competitor of Tyson's,
Exactly. So now you got the picture. PE ratio 13.59, dividend yield of 3.39%. As I say, the Chinese big pork consumers, although there have been a few issues about Chinese pork in terms of additives, quality and that kind of thing over the years.
That type of thing. So yeah, I mean, they all the way down the value chain from production, slaughter and processing. Massive operations in that regard. Interestingly, a Fortune 500 company. It's crept up into that kind of bracket. But I think what's exciting about the stock is exactly what you alluded to in your intro, is the catering to the huge Chinese pork demand. And no one is better positioned than WH to be able to do that. So and we're seeing that demand being very resilient and growing significantly.
I mean, there's a guy called Wan Long who's the founder of this company. They refer to him in China as the #1 butcher. He's like a national hero because everybody's mad about pork, and this is the man who basically took a crummy little communist-owned abattoir in Henan province, which is like, I don't know, the South African equivalent of Kroonstad or something, and built this into one of the largest meat processors in the world, including buying a US company. Which, you would think Chinese company buys a US company, so what, no issue. But it was quite a big political concern and all sorts of American senators making disparaging comments. In the end, they said, no, we will not import any pork from China to the United States, because there were stories about clenbuterol and all sorts of stuff ending up in Chinese pork. So now they said, no, we're coming to buy Smithfield and then we'll take pork in the other direction, which is in fact what's happened. So it's a very impressive company. It's like a national champion in China, of which obviously people are very proud.
Lot of pride there. I mean, also the numbers are massive.
1.3 billion people. You can imagine how many pigs they could get through in any given year.
Millions and millions and millions. Looking at the financials, last year revenue was flat, operating profit they managed to increase a bit, but what I like what they're doing, they're improving the capital structure, so that's the mix of debt and equity in that regard. They're reducing the debt somewhat after the Smithfield acquisition. So yeah, the company's looking financially in pretty good shape.
The other thing, just to explain the name change, the group, as one does when you're expanding that fast, had acquired lots of property and other development activities, so they took that out. And the WH name is formed from the two Chinese words Wang and Zhu, which stand for eternity and continent. So they took the meat processing business only, put it into Hong Kong, listed it there, and they took the other stuff out. So at least investors can now, focus on that particular element on its own.
Quite a pure entry into the processing.
Okay, as usual, we prefer to have more time, but we don't. So this one, I mean, it's only the share chart. I think it did come up. Well, let's put it up again. It's only, in fact, for the period that WH has been listed in Hong Kong. So it's not our usual 5 years. It's only about a 2-year chart. But you can see it is moving up. Those numbers are a little bit difficult to read, but it's moving in the right direction. You feel brave? Want to have a stab and say this one is hot or not?
Look, I like the demand for this high quality packaged and processed pork. I see that going one way. I think the Chinese market is also quite underpenetrated in terms of pork products. So I think the rollout there will continue. Look, it's dependent a lot on currency fluctuations, dollar particularly, and the price of hogs that is traded on commodity exchanges. But yeah, I think there's a long runway on this. So I'm cautiously optimistic.
Yeah, so let's go hot on that one. I think you're right. I mean, it could go up, it could go down. The Chinese economy could expand or not expand. Who knows what Mr. Wan Long's getting up to there, Mr. #1 butcher. But the underlying fundamentals are very attractive.
Correct. You're not overpaying, and you've also got quite a healthy dividend.
And the Hong Kong market gives you the visibility and better corporate governance and tradability, as opposed to being listed in one of the other secondary Chinese markets. Okay, good.